Let's talk to Ryan Littlestone. He is from ForexFlow.live. Very good morning to you, Ryan.
Good morning, Nick.
Okay, we've got 3 slides to whiz through, or more importantly, you're going to whiz through them. Let's kick off with the first one. You talked about this massive level at 7 last week, and it's duly dropped like a stone. What are your latest thoughts?
Yeah, well, as you know, we were shorting it, myself and a load of guys in our trading room, playing against this big 7 level with the trade wars, everything going on, the PBOC and China said to be defending that level, big option barriers there as well in the mix. So we've been scaling shorts into that level from 6.95, and on Friday we got some nice news from His Royal Orangeness, Mr. Trump, that him and Z are all pally-pally and they're looking to get a deal done. And obviously, the chart speaks for itself. It dumped all the way back down through 690. And we decided to take a lot of our money off the table, a big chunk of our money off the table in that move south, because you can't miss an opportunity like that. So we took a lot of profit there, still running a little short into it. And obviously now we've seen further on that on Friday, we got more rumours that our deal isn't as close as maybe some are expecting. Conflicting headlines again from the US, and maybe you wonder whether Trump's playing games ahead of these midterms tomorrow, spinning things in a better light to get those last-minute votes. But as traders, we don't care about that. All we care about is a price move. So we all took some profit, and we're looking to get back into it again as it closes in on 7 again, if it goes that high.
Understood. Okay, well, let's move on to the second slide. We've got the euro against the US, a daily chart. You talked off air about a key level. What key level are we looking at?
It's this 113 level. It's again, we're talking big option barriers down here, and it was defended heavily the first time, as you can see on the chart there. Then again, we got it another hit down there last week, and it got to, I think, 0.2 the low. Load of us again in the room grabbed longs against that barrier level, and we were getting out at 114. But what I'm worried about is that it's not bouncing that far, and to me that suggests that we're not done with this level yet. And if we get a further look at it, then potentially we're going to have some fireworks, and potentially a fairly decent break. So in this case, if we do get down there to test it, I may go with a long just to see if it holds again, but I'm going to go much smaller trade and a much tighter trade. But I also look to reverse that into a short if it does break, stick a sell stop underneath sort of the 90 area, 112.90, maybe 112.80, depending on how it's looking, and look to play the break south if we get one.
But if I look at that daily chart, okay, I'm looking at what looks to me like a massive head and shoulders pattern. Is that too simple, which would be very, very bearish for euro-US dollar?
You could be, but then you've how many shoulders do you want to give it? You could class the first attempt down there as one shoulder, and then you've got another one. So I'm not one for the head and shoulders patterns myself, because they're a bit flaky in my mind, but some people trade them. But, whether it's head and shoulders, whatever you want to call it, that level at 113 is there. It's plain as the nose on your face. So if it holds, then up we go. If it breaks, then it's going to go further south. So one line, one number, you need to trade it one way.
Understood. Okay, well, let's wrap up with the cable chart. Obviously, some Brexit euphoria this weekend. What are the technicals telling us on this currency pair?
Well, the technicals are a bit all over the place because, there's such a big headline risk in this pair, as we've spoken about many times before. I got caught on the wrong side the other week into this October summit that we had, where things were looking rosy, and then it all fell apart, and I was left holding longs. I was adding on the way down because I thought we're still going to get this deal, but the timing was all screwed up. I ended up getting stopped out down sort of around the 128 level. So I took a hit on that, and then I was less inclined to get back in. And, we had a week of radio silence from Brexit. And then again, all of a sudden, bang, we've got headlines coming out that we're close to a deal on financial services and the backstop. And here we are again, we're bouncing, and it's up and down in these V-shaped patterns, and they're very difficult to trade. If you're not in at the bottom, you don't want to trace it. But we haven't quite recovered as far back as the 132 area where we were before the October summit when it was all looking good. So there is scope to move higher, but at the moment the market is it's had enough of the headlines that something may happen. It wants a headline that something has happened, and there's ink on the paper, or we're going to get the summit in November to confirm all this. So until we get those 100% confirmations that there's a deal being done, then the market's gone bid, but it's now getting a bit sceptical about the details. So then we'll have this consolidation period until the next headline drops. But technically, you can lean on the levels, but one headline and you're blown. So you need to factor that in when you're trading. Keep stops tight, keep your trades tight, maybe not as big, and just roll with the punches.
Well, I've got to say, I've read over the years it's the most difficult currency pair to trade, and it looks extremely difficult at this point in time. Yeah,
it is. Sometimes if you get that way, I've traded it, few and far between over the last couple of years, purely due to Brexit. And I love trading the pound, I love trading cable. But with this headline risk, you've got to decide, is it worth getting into that sort of hot water, just trying to chase a trade? So you can pick your points, pick your times, but you be careful about it.
On that note, Ryan, we've run out of time. That's Ryan Littlestone. Thank you.
Cheers.